Good.
Yeah, everything good, bro. But I had a quick question before you get started.
Go ahead.
All right, so when we first log into our Sway Market, it says something about the NOC or the ECN account. Which account should we go to or fund our account at?
ECN.
ECN? All right.
ECN. Yeah. Okay, I don't need you no more. ECN. Okay. So on your dashboard, once you fund your account, you will see two options. Let me see if I can. Okay, forget about it. I'll confuse myself. But once the the second link is it Peter that posted the link?
Yeah, it was
Yeah.
me.
The second link that Peter posted, if you click on it, that is where you will go to fund your account. You can fund it with Bitcoin, Ethereum, USDT, or with a credit card. I don't know how the credit card thing works, so I can't give any advice on that. I've not done it. So I don't know. I fund it with Bitcoin or Ethereum. You can buy a Bitcoin or Ethereum on either Cash App or Coinbase and send it directly to the address they give you. So if you choose to send it to Bitcoin, they will give you a receiving address. Then once you purchase your Bitcoin, you will send it to the address they give you. If you choose Ethereum, it'll be the same thing. They'll give you a receiving Ethereum address. You purchase Ethereum and you send it to that. Make sure you send it to the right address, because if you send it to the wrong thing, you might lose your money and nobody will be able to help you. So, anybody else join? Well, we're recording, so whatever, they can check it out later. But once you fund it, this here we're gonna be doing Litecoin and Ethereum. So each account should have about $1,000 in it. And so like this account here is gonna be Litecoin only. And then the other account will be Ethereum trades only. So we'll wait for Ethereum to pull back. We buy, we sell, we buy, we sell. I mean, this one is Litecoin. And then the other one will be Ethereum. So on here, you see me hovering my mouse, my cursor.
Yeah, we see it. We see it.
So over here, it shows you that these are the three accounts that are on here currently. So this is a demo account. I haven't done anything to it, but this is ECN account 2. This is ECN account 3. I can have an account 4, account 5, account 6, account 7, up to 20 different accounts. So each account here, you want to have $1,000 in. So we're gonna dedicate $1,000 to Litecoin trades, another $1,000 to Ethereum trades. Okay. Over here, you can choose to listen, like hear sound and stuff like that. Play sound on order rejection, play sound on order execution. I believe you can change the whether your screen, let me see, one of these places somewhere. You can change your screen to like white screen or dark mode. It's somewhere here. But this is your free margin, this is your P&L, this is your equity, this is your balance. And over here, one-click trading. If you click on the one-click trading, pretty much once you, self-explanatory, once you click on it, you in, right? It go boom, you in. There's no, it doesn't wait and ask you for confirmation. The moment you hit buy, you're filled. Trading dashboard, this is the position. So I even forgot I was in this position, right? So you can come here where it says chart here. Once you hit chart, it will open chart. Open a chart. Okay. Over here, you have the time frames, just like Trading View. I believe this is pulled from Trading View. So you have that 5-minute chart, right? You have 30-minute chart. You have weekly charts, right? This is Apple, by the way. So you can trade Apple and a few stocks on here, but we just gonna be doing Ethereum and Litecoin. Okay, so you come here in this window and you will type Litecoin, LTC. But when you type Litecoin, there are two options here. Please pay attention. This LTC USD Litecoin, which is the spot. We're not doing spot. We are doing what do you call it? I drew a blank. We're using leverage, right? So LTC USDT perpetual crypto contracts. It's perpetual because it doesn't really expire. So you know how when we are doing options, and options, we have leaps, we have weekly options, we have 2 weeks out, we have a month out, those have expirations. This here does not have any expiration. Hence the name perpetual. It's perpetual. You can pretty much open it and stay in it forever. So yeah, this is the one you want to choose. You want to choose that. You want to choose LTC USDT. And you choose the LTC USDT. This here will be your lot size. This, you got to be careful over here because this determines your position sizing, right? This determines your position sizing. So we'll start off with we'll do like 0.02, 0.01 on Litecoin. So just a quick example. Let's say we want to buy Litecoin. This will be your position sizing. You don't want to come here and put a 1 because if you put a 1, every time the market moves by a tick, this one will really shoot up in your favor or it will shoot down against you. And because this is a strategy where we are trying to we're going to be doing this a lot. So we don't need to make a lot of money real quick. We need to make consistently small amounts of money and also lose small amounts of money. Does that make sense?
Yeah.
Okay. So just to keep it simple, we're going to do 0.01. Okay. For Litecoin, for Ethereum. So if you do 0.01, let's say we're doing Litecoin, we buying Litecoin. I may say purchase Litecoin right now at 89.93. I mean 89.34 or 84 or whatever. you just come here because I have the one-click trading turned on. See, I have the, if I have it turned on. Once I have it turned on, if I come here, I'll just hit buy. Once I hit buy, you see I'm filled. On the right-hand side, did you see that? It's filled. Did you guys see that?
Yeah, we seen it at the top.
Yeah, we saw it.
All right. So once I get filled, I come here and I click on this. Because this is why I got filled at.
Oh,
Somebody said something? Okay. So I come here and I'll click on this. Once I click on this, this allows me to input my stop loss and my take profit. So let's say based on this trade, and I just got into this, like I didn't plan to get in this. It's just for educational purpose, right? But let's say this was within my trading plan and I wanted to get in here. I will come in here, look at this. Once I enter, and remember, I'm doing all my analysis prior to the entry. You don't want to get in and then figure out what your stop loss is, right? But because I'm only using this for educational purposes, I just kind of entered so I can have something to show. But I would have done my research prior, right? I would have chosen my stop loss. I would have calculated everything and just execute on the platform. So I'll come here. Let's say my stop loss is around, this is a weekly chart, by the way. So the stop loss is going to be bigger. So let me go down to like 1 hour. 1 hour. So let's say I put my stop loss at 88.01. So I will come here where it says stop loss. I will type 88. Let's do 88.5. You see that? This means if I lose, I'm going to lose $3.75. So that is my risk. That is what I'm risking in this trade, right? If let's say my stop loss was right here, 85, let's say based on my analysis, my price action analysis, I'm like, okay, if the market breaks down, because I'm bullish now, right? But this is not a call or a put because this is not options. So we're not doing calls or puts. We buying or we selling. So you can't use those terms here. It's not applicable. It makes sense, but it's a different market, so different lingo. So we are buying, right? We are bullish. So let's say I'm bullish on Litecoin. I enter Litecoin at market or at 89, whatever, and I put my stop loss here at 86.25. So let's adjust it. 86.25. Now my projected loss is $9.15. And I don't know if you guys were paying attention to the last live I had. I was talking, but I was explaining position sizing. And I was like, whenever you risk, if you're risking $9 or $10, you should be at least aiming to make 20 or 30 or more. That's the only way you can build your account up, right? So for easy math, let's say I got in here and I was risking $9. I mean, I'm not gonna get in a trade and risk $9. That is peasant. I ain't doing that. I'm just using this for you know what, let me make it realistic. So let's say we put our stop loss at 75. So that's saying if Litecoin was to drop to $75, I'm gonna lose 42 on this trade. So that is my risk, right? Now I'm gonna come here and click on this. And where's my take profit gonna be? My take profit, let's say I want to write Litecoin to, let's say 115, 77. Now I'm gonna adjust my stop to maybe 80, right? Because I want my target to be at least 2 to 3 times what I'm risking. So if I'm risking 27 bucks, I'm aiming to make at least $50. So if the price action, the analysis, and the patterns doesn't give me a potential to make 2 times what I'm risking, then it's not a trade worth taking. Does that make sense?
Heck yeah, and I'm starting to like it.
Yeah, it makes perfect sense.
Yeah, so this one is is easier to know your risk and your losses from the jump compared to, options, or, because options you're gonna be like, oh, if we hit 30% or whatever, but you can adjust. So, and also your your lot size is gonna determine how fast each pip. Because if you look here, it says 93 pips, right? So 93 pips will be equivalent to $27. So if the trade goes against you at 93 pips, you're gonna lose 27 bucks. But if it goes in your favor, 257 pips, then you'll make $77. But this is all based on our position size of 0.01. So we could have chosen, and then I can modify it, right? But we could have chosen 0. Let me see what it will let me do. 0.05, 0.02. Zero point zero two. So I can do 0.02, 0.03, 0.04. But remember, whatever I do, I'm increasing the risk as well. This is where you adjust your size, how heavy you trying to go. So if it goes in your favor, you're going to make it. If it goes against you, you're going to lose more. Like right now, I shouldn't even be getting in, but I was just trying to, use it as an example. But on the contrary, I can also sell, right? I can sell. So I can come here, hit sell, boom. So now I'm in a sell. You see the orders, it failed, right? So I can come here, do the same thing. This is a sell. So I can be in a sell and a buy at the same time, right? My sell position is bigger than my buy position. So if it drops faster, I will be making money, even though I'm losing money on the buy order. Does it make sense?
Yeah, Block. You don't like to sell, but you like to sell on this part.
No. Just for demonstration. I don't, just for demonstration. But see, so like right here, my stop loss will be. Let's say I'll put my stop loss at 91.42. So I come here, 91.42, right? If it doesn't go down, because I'm bearish, right? I'm not really bearish. But based on the order I placed, that's a bearish trade. So it says sell. I'm selling 0.04, lot size of 0.04. My fill price is $89 flat. Currently, it's at 89.05. Hence, my P&L is negative, right? Because the price is, like right now, my P&L is positive because it's going down. So this is like a put. But I'll put my stop. I have to determine where I'm gonna be wrong in the market. So I say 91.42. If the market doesn't go down and it breaks above this high here, kick me out. And when it does kick me out, I only want to lose 29 bucks. That's where I'm at, right? So right now I'm up $1. But where do I want to take my profit? Let's say I'm very bearish on Bitcoin, right? And I'm using Bitcoin as a gauge to get into Litecoin and Ethereum. So let's say I see Bitcoin is up and I see a rejection. I'm like, okay, boom, I'm gonna come here and I'm gonna get into Litecoin and short the market. So where's my target? Let's say 82. So I'll click here, take profit. I put 82. So basically, if Litecoin drops and gets to 82, it's gonna take profit and I'll make $84. But if it doesn't go my way and it goes up instead, I'll lose 29. And this is very important because if your strategy is good, yes, you're going to be losing here and there. But once you add it up, you're going to realize that you're going to make a net profit most of the time because your profits outweigh your losses. And if you have a higher degree of wins versus your losses, ultimately you're going to make money, over a series of trades. So, first 2, 3, 4 trades, you might lose, is okay. But because you have a risk reward ratio that is way, your wins are at least 2 to 3 times your losses, ultimately you're gonna be making money. So once you do that, then you just hit modify, and now you've modified your order with a stop loss. So if you look here, my take profit is down here. This is my entry, right? And this is my stop loss is here. But remember, I have 2 different positions. So if I come here, actually I have 3. So if you click on positions, the positions will show you all the positions you're in, right? It will show you all the positions you're in. So far, so good.
Yeah,
So
man.
far, so good.
Yeah, so that's pretty much a gist of it. I mean, I done took some losses just to demonstrate this shit with y'all, and it's not a demo account. I think I should have used a demo account before I got into a sell. But funny enough, the sell is the one that is in profit. But yeah, pretty much that's all it is. And then, once it hits, your target is going to automatically close, or you can always come here, click on the stop loss, right? Adjust it. Or if when you are closing it, right? So let's say you have a 0.04 size, right? This is your position size. Let's say the market goes in your favor and you up $50. You can sell half of it, right? Or you can close half of your position to take profit. Let's say you don't want to cash it all out at profit and get out. You can If you have like a 0.04, you can sell 0.02. That's basically taking some profit off the table and letting the other 0.02 run, just like the options, right? You sell a contract, you sell 2 contracts, and you leave it running. You can do the same thing if you don't want to close the entire position, but to keep it simple, we'll just start at 0.01 or 0.02. And then as the account grows, we're going to increase our position size. Because this isn't a strategy where you're trying to make $200-300 real quick, or $400, or no, it's going to be $50, 70, 80, 40, 50. But once everybody is on the same page, it's going to be very active. We might be in and out 4 or 5 times a day, right? Once a day, twice a day, depending on what the market is doing. And it's the same asset. So, there's going to be enough action and enough activity that the 40, 50, 40, 50, 40, 50 can add up to $200-300 real quick in a day or two. So we don't want to get in trying to like make $200-300 on one trade like we do with the options. It's a different market. It's very volatile. As you can see, one moment it's up, one moment it's down. Let's look at Bitcoin. So remember, first thing, Ethereum or Bitcoin, you want to choose the one that ends with perp, perpetual contract. BTC, not BTW. So like right here, based on the way I trade, right, I'm using price action to trade. So Bitcoin came down here at 62, right? I could have gotten in somewhere here, ride it somewhere here, get out, and then wait. And I'll be like, okay, I'm watching. Based on what I see, might be like, okay, I see a bullish engulfing or a pinball or whatever. So I'll say, let's get in. So we'll get in. Let's say we get in here, right? We'll get in here. We'll put our stop loss. We'll get in here. We'll put our stop loss here. And this is what I'm talking about. This will be our risk. We get in, let's say we get in at 65, 438. If it doesn't go up, we want to get out at this point right here. And if this is our risk, we are looking to make at least twice, right? So this will be one risk. This will be 2 risk. So if we were risking $50, we would have made $100 if we set our take profit around here. Even without using price action for the take profit, we would have made 2 times what we risk, just based on that strategy by itself. Let me answer some questions.
Yeah, bro, I got a quick question.
Yeah, go ahead.
So
Echoing bad.
Damn.
So say for instance, like, how many shares did we buy? This is obviously not one share, is it? Or we got $1,000 invested totally into this movement we finna do. I mean, how does the money goes?
So you see over here, this is your use. So you see it has a margin, right? Over here. Because right here we're not buying Litecoin, Bitcoin, or Ethereum, right? It's very similar to options where we are not buying the actual asset. Now, if you wanted to buy it initially, we were going to do this on Coinbase, but the fees on Coinbase is crazy that is going to eat up all your profits. So we are not using, we're not, what do you call it? We're not buying the actual asset itself. We're just predicting the right direction and we making money off of that. And then if you make money off of that, you can use some of your profits to go buy the actual, Ethereum or Bitcoin. But if you look here, it shows you your used margin, right? Your used margin is basically, it shows how heavy you are in the market. So if you've only used $10, it says you still have free margin out of this balance, right? I have a free margin of 984. So I can continue to take on positions, right? I can call another trade and another trade and another trade. And then the margin used here will go up. The more trades I get in, the higher the used margin is going to be. And then the free margin is going to decrease.
Oh, I got you. I got you. So it's only about how much money I got invested as opposed to what I'm willing to invest.
Correct.
So like if I could possibly do this with $100, and as long as I stay within that $100,
That's all you can lose. You can't lose more than that. But what
right.
we're doing here, even though there's 1,000, we're not trying to use, like in options, I say only use up 30% of your account. So we're trying to do a similar thing here where we only gonna use up maybe, 20% of our total account. So let's say our free margin, we don't want our free margin to go below, or our use margin to go more than 20% of our entire account.
With the stop loss.
Yeah, I mean, even with that, so we don't want to overuse the margin, but at the same time, we also using our stop loss to even further minimize our risk. And we're doing that because we always want to have some ammo on the side, regardless of even having a stop loss. We still want to.
I couldn't really hear what she said, but I'm really starting to like this more than trading options from the little bit of information I do have.
Yeah, no, this is dope. This is dope.
Yeah, I'm starting to see.
Hey, Block, I have a question. So I'm still confused on like what's the lot size prices like can I buy a full lot? It's saying 0.01.
Yeah,
Can I do
you
0.
can, but your free margin, your margin is gonna be really high to the point where if it goes slightly against you, you can get a margin call. A margin call is when they realize that you can not further sustain any downside, so they will close all your positions, right? So you can utilize, you can do a one, and it will allow you to, but it means you don't have too much room for error. So if the market goes in your favor, you will make a lot of money really fast. But if it goes against you and your free margin minimizes, once you get to a certain threshold, they're gonna close you out.
Okay.
And you don't want that. You don't want to ever get a margin call. Getting a margin call basically means you over leverage, or you then calculate your risk before you got in, because you should never get a margin call. Like under no circumstances should you get a margin call. But if you go in with a high lot size, a big lot size, which the system will allow you to place it, right? The brokers will allow you to because they know that ultimately they making money, right? So they will allow you to do it until it goes against you and they close you out. Then you have to go and refund your account, come back in, and you probably make the same mistake again and you keep losing money. So in order not to even play that type of game, just start off slow. And that's why I was saying we're going to be doing this so many times that even the 0.01 or 0.02 will still add up if you stick to the plan and minimize your risk. There's going to be enough trades that you risk 20, you make 60. You risk 20. And remember, when I say risk, it doesn't really mean you're losing. That's just your risk, just in case you lose. But if it was to go in your favor, let's say you get 3 trades, you win in a row. You risk 20, you made 70. If you get 3 trades that you won, now you've made $210 in profit. If you lose the next trade at $20 or $30, it's house money now. You still got a buffer of $180, $190 of house money that you can lose 4 or 5 trades and you'll still be trading with house money. Does that make sense? So don't get carried away because it could be very addictive because unlike the stock market or the options market, this is 24/7. This never closes. Anytime, any day, you can be sleeping, roll over on your bed and just get in a trade and make money. Like you don't have to wait until 9:30 and then 4 o'clock. We're like, oh, the market is closed. This is every single day. It's never closing. Hence, perpetual. It goes on forever. So knowing that you have access to do this forever, you don't want to get greedy and come over here and put 1 or 2. That means you try.
It's that because because the way the market works, if the Bitcoin be dropping really fast, and then if you put like 1 or 2, you lose everything. Liquidate
Exactly.
your
You will
wow.
lose
Okay.
it. You will lose it really fast. Like you'll be
Wow.
and I've made mistakes like that, and I've lost like $500 just because I'm watching the market here, and I'm like, okay, it's going, right? It's going. Maybe I didn't move my stop because there's another thing you can do. You can use a trailing stop, or you can just gradually as the market goes. So let's say I get into Bitcoin here and Bitcoin gets up here. I move my stop from here to here. If Bitcoin goes here, I move my stop from here to here. So if Bitcoin retraces, boom, it kicks me out. But remember, I got in here. So even though it kicked me out with a profit. But sometimes I've done this where I get in here and I'm up like $400 or $500, and the market will turn around and come kick me out at my stop loss because I didn't actively manage it. And now I'm losing a whole lot of money. And just as fast as you make it up, you lose. So let me show you. So like an example, like Bitcoin, like here, let's say we got into Bitcoin here. Like from here to here, you're making a lot of money. But Bitcoin turned around and dropped from here to here. So let's say you bought it, you then manage it, and you just looked at your trade, you'd be like, oh shit, I'm up. And it could be 150, 120, 250, whatever. But if you don't manage it, if you don't trail it, if you don't set a target, you could have gotten in here as a trade and got kicked out, right? Got in again as a trade and got kicked out because, it didn't really quite hit your 2-to-1 risk reward. So there's going to be losses, but if you manage it well, look at Bitcoin. That's enough movement. You could be selling, buy, sell, and like I said, this is around the clock. So there's no, you know how when before the stock markets opens, everybody be like waiting, like, yeah, opening bell. Ain't no opening bell here. This is all day, and because it's all day, see, the stock market gives us an opportunity to go to sleep, reset, and come back. This here, there's no opportunity to relax. You have to determine when to say no, when not to trade, because the market is there all day. This is all day. There's no crazy gaps or whatever, right? It's all day, all day. So you could be in, out, in, out. Could be in Bitcoin here, get out here, get in here, get out here, get in here, get out here, sell it, buy, sell all day, weekend, holiday. This coming Friday is Good Friday, right? But we can't even make money in the stock market, so it's not really a Good Friday. But in the crypto market, you always making money, or you always losing money. Conversely, so it's nonstop. So I just want you to understand the opportunity also comes with a lot of risk. So don't do two. I did a 0.5 the other day and lost quite a lot of money because I thought I was in good. I didn't set a stop loss. I'm like, I'll come back and do it. And then I checked, I was up like $400. I'm like, yeah, I'm going to wait until shit hits like $1,000. And then boom, the market drops. So I'm like, here, all that money is going. Either your stop loss is going to hit or you're going to get a margin call. One thing, like I say, you don't want to get is a margin call. So appreciate that $30 or $40. We're going to be risking maybe $40, $50 to make 100, maybe 60 to make 120, maybe 75 to make 150 or 200, right? But there's going to be so many opportunities that if you make 50, 50, 50, 50 4 times a day, that's $200 you made. You with me?
Yeah, this is beautiful.
I cannot see the charts properly. I'm trying to scroll. I don't know if this. Why did I even get this MacBook?
It's almost if why even do the market, the stock market? Why not just deal with this all day?
Hey, you can, you can, and like, look, it's not just, and you can do forex, right? You can do, and I'm not saying you should go do it, right? But these are currencies. You can do the same thing. You can trade gold, right? You can trade gold on here. This is gold, right? So you can do the same thing with gold on here. You can trade gold during so basically I can buy. So let me show you. See, the stock market is not open, right? Stock market is not open. Let me see if I can buy gold. See, I just bought gold. Failed. I bought gold. I don't have to wait until the stock market is open to, get on there and be like, hey, we buying gold. It's around the clock, right? But gold, unlike crypto, still goes with the forex market schedule. So Friday by 4, that market is going to close and it opens around 5 o'clock on Sunday, all the way until Friday. But if you only trade in the stock market, you have to wait until the stock market is active. So on here,
can you do Apple here
yeah, you can
at this
do it.
time?
No, because the market is closed.
Wait,
Oh,
would you be able to do futures like trade SPX and NASDAQ? Because those indexes are 24/7, right?
Yep.
Oh shit. Okay, this is a game changer.
So a block, man. I think everybody agree we can do this all day, all night, all
Yeah,
weekend.
yeah, that's what I'm saying. But that's what I've been saying. I just call SPX. I just, so if I come here to my positions, these are trades that I just called, right? I haven't set any stop losses. I can go in and set stop losses. That's why I'm saying because of, the flexibility and the fact that we can trade more, you don't want to make your sizes too big because you have so many opportunities that all you have to do is to wait for a good setup. Like none of the shit that I did was a good setup. I'm just clicking because I'm trying to demonstrate and show you that the market is live right now, right? So even Microsoft, right? When the market is open, you can be trading on your Robinhood. You can still trade Microsoft, and I think they even got AMD. I don't know if they got. Let me see. They got Meta. No, yeah, they got Meta. Facebook. Right. So, like the opportunity is crazy, but it could also be very addictive because it's right there. There's so many things you can do. You know what I mean?
So I guess here's where I'm confused. So let's go back to the SPX example, right? Or actually, let's use Litecoin as an example. So you bought 0.01 lot size. So how much did you actually spend on getting that lot?
Hold on, I think there's a thing here that will show you because it's different for every asset. So if you come here, you come here, it will show you. So your margin rate is 1%. Your margin rate is 1%. Trade size is 0.01. It shows you the lot size is 300. So when you come here and it shows you the date and all of this stuff, once you come here, each one is going to be different based on the lot size. So for example, hold on, let me show you something. If you use Ethereum, you see the lot size of Ethereum is
Yeah, 20.
different from the lot size of Litecoin, right? It's still 1%. So you have to do the calculation. I forgot. You have to do the calculation on each one to see. Let's look at BTC because they all have different requirements. BTC, you see the lot size for BTC is 1, right? The margin rate is all 1%. Hold on, let's look at Apple. So I think with the stocks is a little different. Lot size for the stocks is 100, right? The margin rate is 10%. So you put up more money on the stocks than you do with the cryptos. Let me look at Euro USD. Euro USD, lot size, bigger lot, margin rate 0.02 because it's a more liquid market. And if you look at the time, it shows you the time here. See, this is the time that is closed. Saturday and Sundays. The rest of the time, that market is open. The forex market is open. So the lot size is gonna be different based on the asset, and there are position size calculators that you can use prior to getting in. I'll post one of them, and then you can use that to size before you get in. You input your entries and your stop losses, and it will tell you, it would calculate for you. Capiche?
Gotcha.
Any other questions? So I'm gonna just like these. Let me see. I'm gonna just close it, close, right? You can simply just close it like that, because like I said, I have that one-click trading. I could just close. So let's say if I was up, I'll just come here. If I see that my P&L, let's say I'm up $20 and it hasn't hit my stop loss, I can just come here, click the X, I'm out, I'm out, I'm out. Like, just like that. Boom, 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 boom. You know what I mean? How y'all feel? I mean, I never trade on here on this laptop, so I'm still.
Man, I'm
So
truly loving this.
yeah, I like this block. So let's say for us, we should just uncheck that and click on one click trading. We should uncheck that one so we can just be on the safe side, right?
Yeah, just to be, if you starting out, are you sure you want to
Yeah.
activate? So let me see if I can show you. So without the one click, let me buy. You see, let me buy like here. Because remember the first time I did it, it was just straight up, right? You seen that? Straight up. I just bought it and then it fell. Boom, boom. Here,
Yeah.
now I can come here and I can set a limit. I can set a limit order, right? Do all of this shit here. Limit order. This is my lot size, right? Sell or buy at this lot size. You get what I'm saying? So if the one click is going to fill you basically at the market, like I'm in, boom, I'm entering. But if you don't want to enter right away and you want to set a limit order, you can set a limit order to get in at a particular price. Either sell at this price or buy at this price. That makes it a limit order, right? Because you're not just entering, you only entering at a certain price.
So how do we set up the stop loss and take profit and stuff like that for this one?
You said how do you set it?
Yeah, how do you set up the stop loss and take profit like you showed us last time with this one?
Like
Do you have to click I think the advanced one, that little button was the white link right there at the bottom. Go down.
You said what?
That one right there. What is that? That's so small. Okay.
Yeah, stop losses.
Okay. So you can do it right there. Okay.
Before you even get in, right?
Okay.
So
Yeah.
this is a limit. I mean, this is a limit order. So you can set all of this and probably not get filled. If the market never advances to your level, you wouldn't get filled. So you'll never be in the market and your stop losses or whatever wouldn't apply. But if you put in your limit order and it fails, then your stop losses will be activated right away. And you can walk away from your computer. You set, let's say you like Euro USD. Once it gets to point here I want to buy. Once I buy, my stop loss is here, right? At 5 pips, I'll lose $1.50. I want to take profit at, let's say, when the market goes to 0.1.09, whatever. So, I want to make $44. I want to lose $1.50, right? I'm risking 5 pips to make 147 pips, which is crazy. And pips is just, percentage in price. Percentage in price. Pips. 1 pip. So like every time the last decimal moves, for every point you make whatever you choose, whatever the lot size is, that's going to determine how much money you make on the way up or on the way down. So that's what the one click off. But if you have the one click on, that means you're just trying to, you're just trying to get in and get out.
So, Block, man, I think I like that. I like this one too. So, can you give us some forced trades too?
Yeah, but I don't want to do, you see, I deleted the Forex from the Discord, right? Because that's where I actually started. That's what I started with, Forex, for many, many, many years before I ever started doing stocks and then crypto and then most recently options. But I felt like the platform was, it was too much, right? So there was too much going on. So I just kind of wanted to minimize it to stocks and crypto. And now we are doing this. But yeah, eventually the Forex market is like, there's so many pairs to look at, right? It's currencies always go in pairs. And I think they even got crude, they got oil, right? So you can trade oil. You can trade crude. You buy and it moves fast, right? But also the thing with crude and gold, the time that you trade matters, right? The time it matters because your spread may be bigger when the actual U.S. market closes. So it's best to wait when there's more liquidity in the market. Even though you can trade oil, you can trade gold, you can trade certain currency pairs. I mean, most of the currency pairs. But overnight, right now, the only markets that are active is the Japanese, the Asian market. So the spreads are gonna be wider. But if you wait until like 2, 3 a.m., 4 a.m., that's when the London markets open. Because remember, they're ahead of us. So the banks open around that time. While we sleep in 3 a.m., the banks in London is open. And they kind of interject with the Japanese market for a couple of hours, right? So there's a lot of action around that time. So even with these markets being open, a lot of times you still have to know when to trade, when not to trade, because you could be spending a lot more money just based on the time, right? It's a premium you pay. You pay a premium because there isn't too many participants in the market at that time. So yeah, I'm just trying to. That's why even with the Litecoin, like you can even, I think they even have, like they have Shiba, right? Shiba, they probably have Doge. They got Dogecoin, right? They got Doge. So that's a whole lot you can do. But I don't want it to become like another thing where it's like, oh, we trading this, we trading that, we trading Apple. I just want to stick to one per account just to keep it simple. Somebody got their mic on. All right, where's the Zoom thing?